Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, October the 23rd. The year's 2024. Let's talk trading, questions and answers. These videos are for educational purposes only. Your results may differ from mine. And a friendly reminder to always have your risk management in place, so you don't lose more than you're willing to lose on any one single trade. So, I had a few questions out there on YouTube land, and I answered them, but I thought, I should probably do a video, because there might be some other people that don't read the comments. Go back and read the comments. So, one question here was about, isn't 10 lots equal to $100 per pip? Well, yeah, 10 standard lots is $100 because one standard lot is $10 per pip. One mini lot is $1 a pip, and a micro lot's a dime a pip. And that's on the pairs that are based in dollars. So you got your quote and your base. Or is it base and quote? Anyway, let's see. Then another trade was, they said that they kept hearing the same things over and over, or we need to keep hearing the same things over and over until we get it. I'm a trader who has tried to grab 2 pips at time, but poo-pooed it because I've then taken huge losses, which have killed all the 2-pip gains. He wants to know, so my first reply was, well, quit taking huge losses. I mean, to me, that's kind of obvious. Says, please explain more on what an appropriate stop loss would be to manage these type of trades. And, I replied that if you're taking 2-pip gains and you take a 10-pip loss, then you need 5 trades. So one loss would wipe out 5 wins. That's probably not a good idea. What if you had a 4-pip? Then only you'd make 2 trades. But the thing is, if you'd have to be better than about 80%. So you'd lose 2 or 8, and then you'd win 8 or 16. So you'd be making progress there. But that's that has to do with your efficiency. How often do you win? How often do you lose? And then, let's see, there was another question, something that we're going to have to look at hard. And they were asking about the Dow Jones Industrial Average. Unfortunately, on my account, I don't have that. So what I thought was, somebody else was talking about the US 30 daily. So I said, you know what, how about I pull that up? And so the first answer is, their question was, what do you think about using the rat zone for the Dow Jones Industrial Average, setting the rat zone at a 40 pips trigger and periods 30 minutes? Or it worked better with bigger or smaller pips trigger zone. So the thing about that is, I don't know the answer. I said you have to run the statistics. So I said, so I thought, okay, let me show the traders, how to use a frequency distribution indicator to do that. So, the rat zone is based on something that I observed on the pound one day. And you can look at this US 30 daily chart and kind of see the same thing. Look at the size of these wicks. I mean, some days they don't have much, but most of the days they do. And, depending on the chart resolution, And for some reason my chart seems a little unresponsive at the moment. Not sure why. But you need to run a frequency distribution. So once again, in these wicks, but I'm not sure how much this has to move and how much it makes per tick. But I guess the traders who trade it would know. But as far as the analysis goes, you can see here it's going to go between 0 and 100, 100% of the time. But as I was running these numbers, they were really high, so I said, I guess I have to crank it up to 1,000. So you can see close minus the low. So that would be the lower wick. So you got 97, 95. So here, somewhere around 10,000. I don't know how often it moves that much. But that's actually that's not the right. It's not the close minus the low. What we're really looking at for the lower wick we need the bottom of the candle, not the close, because close minus low sometimes includes the body. But that still would be okay, because if you were to get in there and the candle keeps moving, but it's days like this where close minus low and bottom minus low are the same, where this close minus low is not the same because the bottom is the open. It's a distinction you might want to look at or consider. So just looking at the lower wick here, bottom minus low, you can see once again, so it looks like somewhere, I usually like to look at about the 80 percentile. So it looks like somewhere between 1,000 and 4,000 or 3,000 maybe is where you'd want to put that level. Now, I'm wondering, let me pause the video. I just had an idea. I wonder what would happen if I put the smart rat zone, if it would even work on this instrument. Because remember, these indicators I build them using FOREX, but you know, the idea should work on any instrument, but it's just, you know, I code it in such a way that I know it's going to work in FOREX. You know, if I wanted to use a lot more real estate and have these numbers, you know, self-adjusting or whatever, you know, that'd be a different story. So I'm going to, okay, so I'm back. The smart rat zone, it's pretty interesting here. It's saying, it's looking like, in this case, it's about 44 here. And in this particular case, it's a lot bigger. But this is, once again, how you want to analyze it. Because you can try certain things, but usually, if you do a little statistical analysis and you run a frequency distribution, you can tell where these horizontal lines need to be drawn for the rat zone. Let's see, and I think that's most of the questions. Let's see. Oh, the other question was something about about the trying to achieve the 5 pip goal. What stop loss pip size would you use? And my reply is, the thing about stops, if you put your trade on, you put your TP, you put your stop loss, and you walk away, that's one thing. But if you're sitting here at the charts, watching and trading, there's sometimes you can see, what, this price is just moving against me. It doesn't look like it's coming back the other way. There's no reason for me to stay in this trade. How about I just, the elevator's going down. I wanted it to go up. So let me just, get off right here. Hit the button. The door opens, you get off. And then you wait for the elevator to come up. I mean, it's the same with price. So, but once again, I would say no more than 2 or 3 wins should have to make up for a loss. And part of the problem or part of the situation is, some traders think, well, if I lose this on one trade, I got to make it up on the next trade. And that'll get them in trouble. So if you kind of stick with the 2 to 1, then, sometimes you get lucky. You jump in for a 2 pip trade and the thing jumps up 5 pips. And so you make up for the loss in one trade. But you don't really count on it. Let me just take a look here at something here. Curious. So this plotted the rat zone at about 84 pips. That's interesting. So over the last 100 this is M15 frequency distribution. Go back to the So wondering what's going on. That's very interesting. So, fellow traders, I hope that answers your questions, and feel free to ask more in case I didn't explain it well enough, because sometimes, some of these things, make sense to me, but it might not make sense to you. So don't be afraid to ask if I didn't communicate it well enough, because it's up to both of us to make sure we have clear communication. So remember, traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.